Good afternoon, everybody. It's Max Convexity. Welcome back to my channel, the Daily Covered Caller. Jax is excited. He's running over here. He's like, who in the hell are you talking to? All right, let's do this daily update. So the market just closed. It's 3:02 here in Hill Country, Texas. So means the market's been closed for 2 minutes in the Central Time Zone. So let's check out these. Let's start with the Yield Max funds. Then we'll look at some Defiance funds. But let's just start with the general Yield Max funds. Look at NVDY today, down. Of course, not down as much as the parent asset, which is good. TSLY down, but not down as much as the parent asset, which is really good. Now look over here at MSTY. MSTY up when MSTR is not. That's nice. Same thing with OARC. OARC is up despite the parent asset being down, as is GDXY at this point in the day. Now, this isn't the final quote. You know, this can still change, but this late in the day, maybe it should be pretty close, right? You guys have a good week in the market this week? All right. Let's see. Boy, SMCI had a really, SMCI and Y did well. You'd really have to say GDXY is the standout, being as it's the only one, or I guess MSTY also, the only one that outperformed its underlying. So now here's some more. Here's a complete list. Now on this list, I have the funds on the left-hand side that have done the call spread strategy, the new strategy. And the funds on the right side are the old strategy. Well, I just did this for comparison purposes, but Amazon, they had a call spread on this week, and they're actually up for the week. Not as much as the underlying, but they're up for the week. But look at this, AMDY beat its underlying. And this is the change for the day, not for the week. But AMDY beat its underlying today, which is great. JPM was up about as much as its underlying. Coney caught about 90% of its underlyings upside. It's showing, I think that's wrong. There's no way Apple's not up. Apple and Apple are killing it. Here's what it looks like. I put the call spread on here. The call spread is this yellow box right here. There's no way that Apple isn't killing it today. I guess, though, maybe the fact that Apple pulled back late in the day, that's probably all it was. It probably made Apple pull back also. Yeah. But it was still a good day for Apple. It was still higher than where they started yesterday. But I guess it's lower than where they started this morning. So we'll see. We'll see. But Coinbase had a great week, of course. Google, they also had uncapped upside, but they did not perform as well as the parent asset today. Moderna, MRNY, call spread strategy, but the stock went down. The call spread won't fix a stock that goes down. In fact, it makes it worse in that case. Or it doesn't make it worse, but it just, the effect of the stock going down is all that much worse because you did a spread instead of just a covered call. Covered call is more defensive than a covered call spread, where covered call spread is a little bit is more offensive. All right. So let's see what else we have here to look at. All right, here's the index. Let's look at the index buffer funds, and let's talk about Defiance really quick. Maybe even round hill a little bit, but well, it's disappointing to see SPY-T down more than the index, but it doesn't really surprise me. At least it's not doing as bad as iSpy. Look at iSpy. Surely that's a bad quote. Like I say, there's something about Google Finance and iSpy. Let's just look at it here. Okay, so they're showing iSpy down 20 bips right there. And I don't know why Google Finance cannot figure this out. So in other words, iSpy is down about as much as the index. I just need to take it off of this one. The other ones, it picks up fine, but not iSpy. All right. Look at JEPY. This kind of day, the JEPY is built for because it's where they sell the full 24-hour option. They earn, Jackson, they earn all the money they can. It never fails as soon as I start a live stream. All right, JEPY showing some nice buffer. SPY looking good. Look at this. SFOL's up, even though the market's down. Now, why is that? Well, that's because SFOL sells volatility. Now, let's look at volatility. You know, I'm always talking about my volatility model and everything, but it's kind of one of the reasons I look at it. But in other words, for another way to look at it, whenever I have a green box on the screen, would be a good time to own SFOL, let's just say, because those are times when short volatility is in fashion. So sure enough, when the green box is in, SFOL went up. Green box, SFOL's going up. Okay, SFOL monetizes volatility going down, and that's why it's one reason why it's such a good fund. It's basically like playing the stock market, though, because volatility goes down as the stock market goes up. So you could also do the same type of strategy just by playing, something like iSpy or JEPY or JEPQ or something. Hang on, I gotta let Jackson out. Okay, sorry about that. All right, so let's see what else we have to look at here. We're looking here in the indexes. So let's see who are the standout indexes today. Riser, I love this one. I need to make a full video on it. Look at USOY just killing it. Now, we follow this one on a daily basis, but it's just murdering it lately. Yes, Jackson, can I help you? I think maybe somebody knocked at the door and he heard it, but no one else is here right now. I thought maybe somebody else came home. Okay, well, the usual suspects are up. Look at AIPI. That's a great fund. FEPI is a great fund. No real surprises on this list. What do you bet ULTY is down? Let's check. YMAX is down. GPIQ, IWMY. I know ULTY is down. I guarantee it's down. Whenever we find it, it'll be down. Now, ULTY is a fine fund. It's just extra volatile. So with extra volatility on down days, it's usually down more than the other ones. But there it is. Okay. Well, ULTY, it's actually doing great. Showing tons of buffer. It's only down about half of what its underlying is, which is super. All right. Let's look at these Defiance dividend estimates, and then I'll take questions from you guys. Then that's really all I have to talk about, unless we think of something else. USOY, I just revised it down today, and I hope I'm wrong. It's only at 82 cents. I'm going to look at that again. Hopefully I'm wrong. Maybe the fact that oil's been rallying, it made oil volatility pull back possibly. I don't know. There's no way that's right. Last time I guessed $1.50 and it was only $1.05, but I don't know. All right. Let's see what else we have to look at over here in Defiance land. I just want to show you guys JEPY is looking at a $2.44 dividend, about a 66% yield. They're actually up money on the month right now, which is really encouraging. They're actually up 49 cents a share, or they've actually, in other words, they've made $1 million this month trading. So that's good. That is really good. $2.44 dividend, like I said, on triple QI, dividend's $2.66. And these guys have also made money this month. They made $5.1 million or 86 cents a share. Great job, guys. And like I say, their dividend's $2.66, which comes to around 88%. That'd be huge, right? IWMY, on the other hand, let's see what they've made this month. They made 96 cents or about $3 million. They have about 3 million shares, 3.5 million shares. They made about $3.5 million. Math's easy to figure out, right? They have about 3.5 million shares. they've caught about 400,000 in extrinsic. All they do is divide up the extrinsic and pay it out. That's all I do to make this number, is just divide this number by this number. You guys can do it yourself at home too. It's super, super simple. All right. So see, I'll take any questions now. If you guys have questions, or why don't you tell me how you're doing? We'll see who all's there. All right. I forgot to put a banner out. I should have put a banner out. Should have put a banner out that said TGIF, right? Daily covered collared with Max. Well, that'll work. Never want to waste a chance to put a banner out, right? Okay, so I've also started to make I'm trying to start following the round hill dividends. And there's other influencers that follow the options, and I'm not trying to do that. But all I want to do, and I may start doing this for virtually everything that pays a dividend, is just follow the volatility of the security, and then from there be able to estimate a dividend. So anyway, I'm trying to do that with Round Hill. You guys might think this is interesting, maybe so, maybe not. I don't know. But I just started having them plot the volatility. Okay, so there's such things. You've heard of the VIX. The VIX is the 30-day measure of volatility. Whenever somebody talks about the VIX, that's what they're quoting. They're quoting the 30-day measure of volatility. Well, there's a one-day VIX out there. No one ever quotes it or whatever, but you can pull it off data sources. Well, that one-day volatility is exactly the pool of money that Round Hill is using. That's where they're selling premium, and Defiance is, for that matter, as well, with one difference. Defiance does it at the close of business the night before. Okay, Round Hill does it at the open. So you can look at this one-day VIX, and you can look at the closing quote, which shows you the price the night before, versus you can look at the price in the morning where it opens, and you can account for differences between Round Hill and Defiance just that way. So I'm making some content on that, but then I decided as long as I had the volatility, there should probably be a way to guess the dividend with just the volatility. I don't know. I think I said 33 last week, 33 cents, and it was 20 cents. Anyway, I'm sticking with it though. I'm going to try for 32 cents. The estimate's going to be over here in this right column. And I guess it can change based on if because it doesn't have to be final until Tuesday night, because that's when they announce but for right now, I think 32 cents is something I'm solid with. I don't know. I was a little bit disappointed with that 20-cent dividend, but one of my viewers communicated with me today, and he told me he talked to somebody at Round Hill or had emailed them, and it was because the week they were paying for was the week that had the holiday in it. So they're paying a couple weeks behind. I've also heard before, I believe Dave Mazza from Round Hill has said that they manage distributions, meaning they don't always pay out just everything they can, like Defiance does and some of the other ones do. They'll try to be a little strategy. They'll pay some and try to hold some back and try to smooth out the ups and downs. And that's a good and legit way to do it. But because of all that, it may make it where there's not a formula I can use to predict it, because part of it may depend on something that you can't put in a formula. But anyway, I'm going to keep looking at the daily, or at a 5-day rolling average. If you look at a 5-day rolling average of the morning volatility, that's the market they sold volatility in. So anyway, right now it's 13.2. About a month ago, it was way less than that. It was only 10. But, and a month before that, it was only 7. So volatility is tracked lately. And I know that the dividend was only 20 cents last time. I bet you it'll be higher this time. I'm thinking 32. All right. So what else do we have to talk about? You guys like Round Hill, don't you? I know that I have a lot of Round Hill bros out there. I know I got a lot of Round Hill bros. What's up, Michael? So are they going weekly in the future here? Oh, Defiance. Yes. That's what I've heard. I've heard the same stuff you guys have heard. Going weekly, I think, starting October 6th or something. But I mean, that's what I've heard. I've yet to see an official press release. Jay was on Kamir's show the other night, and he talked extensively about some of the changes at Defiance. I was mainly concerned about the timing of when Defiance sells the option. The main thing that differentiates Defiance from Roundhill right now is the timing of the 0 DTE. Do they sell it at the close so they get 24 hours of time decay? That's the way I prefer. That's the way Defiance does it now. Or do they let it go through the night and don't do anything, then come in the morning and then write the option? So there's advantages and disadvantages to doing it each way, but that's kind of what I was focused in on more so than the weekly. The weeklies to me is kind of a non-issue, but yeah, I do believe they are going with weekly. So I do believe that's true. Yeah, let's see what else is going on here. We retire on dividends. I bet I know who this guy is. Hey, thank you. I appreciate it. I appreciate it. Thanks for watching. Thanks for watching my videos. I really appreciate it. I'm trying to put out some more YieldMax content. There's already so many people that do YieldMax really well. So I'm trying to do something different. I don't want to do what Corey or what Rod do, or what a lot of other influencers do. I'm not just, I mean, I don't want to, but anyway, the buffer, I'm trying to mainly hit the strategy side of it. And the side of it is like, how much upside did these things actually really catch, and which ones catch more upside than others, and why does that happen? So I'm trying to make that my niche. I'm getting ready to hit 3,000 subs, which I'm kind of proud of. I'm really proud of. Let's see it. Oh, look at this, $29.99. How do I look at this? View stats profile. Anyway, there's a way to do a live analytics. Maybe like this. Now, let me know what kind of videos do you guys like to see? I want to do more Roundhill content. I'm going to start every day just comparing Roundhill with Defiance and iSpy and T-Spy, just the daily ones. Those are the important ones. Okay, so I was going to look here at analytics, and then we'll go to advanced mode. Look at this, last 28 days. Well, you guys are like 95% male. I was trying to just put up the actual subscribers. Somehow I screwed it up. It's really easy. See, life count $29.99. Oh my gosh, go find somebody. It's not that big of a deal, but there for a while, I just, sometimes I just don't put out much new content, and it sure shows on my subscriber count. I lose them. And then when I start thinking of new stuff to talk about, which has happened in the past week, and you can see the sub count blew straight up. So we'll see. I appreciate you guys for being here. All right, you able to do Beto? Okay, Beto. Okay. I don't know. Okay, so as close as I get to doing it is when I talk about this. When I bring this chart up, and then I go, oh gosh, there's a new buffer. Yeah, this is as close as I get to talking about it, because it's always it always makes Maxi and YBTC max out, because it's so much more volatile, and I keep the Bitcoin ones down at this end of my buffer report. This shows how well the high yield fund is done compared to the parent asset, like starting from left to right, just for anyone who hasn't seen it before. SPY-T, that is the high yield fund, so it's down 30 bips. Well, hell, the parent asset, which is SPY, is only down 20 bips. So in this case, you would have been better off. This is over just one day. Just to have SPY, you would have lost a little bit less. SPY-T is leading on the way down. Not good. This iSpy is not, that's a bad quote, but this ZIVB, that's a good quote. ZIVB is one of the big losers on the board today. And it's important I think it's important to know that kind of stuff. But at the same time, there's always big winners on the board too. Look at FEPI and AIPI killing it today. Look at SVOL. SVOL is a real good steady Eddy fund, killing it. One of the greatest steady Eddy funds is JEPI, and it was down. It wasn't down that much. But the fund that I love so much that everyone else hates, a Defiance, Look at that JPY, one of the only one in the S&P category that was up. Well, I guess, and SVOL. SVOL's not directly in the S&P category, but indirectly it is. So, but that's that's good. That means something to me. But you can see over here the Russell funds were down more. You can see the red. The red is how far the parent asset was down. So the Russell got killed today, and some of the funds in that class pulled back. So other than looking over here at Maxi, like right here, and going, gee, Maxi actually did a great job because they caught very little of the downside. I'd say about a third of it. So on a daily basis, they do a good job. So, but other than look at that, that's really about all my involvement in Maxi. I'm the kind of believer that somebody asked me which one of these funds, NVIDIA or GDXY. And I don't think there's a right or wrong answer. In fact, I don't think there's any really bad of these funds. I don't even think there's anything really wrong with ULTY or there's nothing wrong with any of these funds. Some funds just have the risk level turned up all the way, to 11, and some funds have it turned down. But I think that any of these funds could fit potentially or not, depending on your circumstances. But on the GDXY versus NVIDIA question, who's to say which one's going to be better? This past year, you would have rather had NVDY, right? Now this next year, what do you think? GDXY is based on gold miners, right? It's hard, it's hard to say, or really impossible to say, but that's what makes the market so fun. So I think I finally copped out and just told the viewer, it was a viewer question, just to get some of each or something. But anyway, I'm sorry I don't have any, but Michael, not to dodge it, I'm sorry I don't really have much BETO content, but I'm trying to just cover the industry as a whole. So, and I did talk about, not really BETO, but I talked about Maxi, which trades BETO options at the end of last year. And it's because Maxi was the number one performing fund for the whole year. It was up like 185%. So yes, I will talk about Maxi and BETO if it continues to do great and stuff in that context. But I don't see ever like having, following the option trades in BETO. I'm just not that much into the detail. It's all I can do to keep up with the Defiance trades. But, that's just me. All right, Michael, what else? So is ULT on the brink of a split? Who knows? What's its price? I would say they're all on the brink of a split just because of the nature of them. Any of these funds that pay more than 50% could split at any given time, just math-wise. Think about it, because when you pay 50%, it means that your underlying of whatever you're tracking, all of these covered call funds track something, whether it's Apple or NVIDIA. When you're paying 50%, it means that your underlying has to be up at least that much, really, if not double that much, for you not to have NAV decay. So any of these funds that pay 50 and 100%, they're going to have some kind of NAV depletion problem. They may not in the short term, because the market may blow up so fast and may appear like it's not, like it doesn't, have NAV depletion, but they're all going to have it. The more they pay, the more they're going to have. It's just a fact of life. So yes, I would say ULTY is on the brink of reverse split. I'd say all of them are. And I think he's going to reverse split it to around 50. So he doesn't have to reverse split it so often again, because the reverse split, I think he thinks, and I think that it's a distraction. It's not really an issue. Money wise, everything stays the same. They just change the shares around. So Brad, I'm agreeing with you. They're gonna split it to 50, I think. But I'm not trying to rant on that, Michael. I just on the reverse split, but it's just these are these are the kind of funds that pay so much, they're almost necessarily going to lose some NAV, but they're going to pay hopefully twice as much NAV as they lose. That's the idea, and all of them have been doing that so far. Even the ones that lost major NAV. Look at XDTE. XDTE's losing. Check this out. Let's check this out. You guys are always talking about decay and everything. Dividend channel. let's compare. Now, XTT is a great fund. I'm not throwing shade at it, but I'm saying even as good of a fund as it is, has tons of NAV depletion. NAV depletion out the ass. NAV depletion everywhere. I mean, it may not have as much as it may not have as much as. Hang on a second. It may, but on the other hand, it may not have as much as other funds, but it has plenty. Let's compare triple QDTE and triple QI. Okay, triple QDTE came public around 46, is now at 42. So that's NAV depletion, right? It's lost 10% of its value in a half a year. At that rate, it's going to lose 20% in a whole year. Yeah, and that's fine because it's paying about 30%. It's still going to be a great fund. That's the way these funds work. That was my point. Yeah, exactly. I'm not saying who cares. It's something that you need to consider, and it's something that happened. It's something that's there, but it's one of many things to consider. And if you're using these, what I would call as an income fund, like you would use a bond or like you would use a real estate investment trust, if you're using, for just a portion of your portfolio, but just in to generate a little cash to spend or for diversification, these work perfect for that. When they fall apart is when somebody buys this and then that's all they have. These aren't great standalone investments. In fact, these are lousy standalone investments. But to me, these high yield funds work great as part of a larger allocation. So, and I think that's kind of what some of these people like Roundhill have done, and they've hacked the system and they've seen, and this is my opinion. I'll have to ask Dave Moz if this is true, if he ever comes on my show. But I wonder if they were looking at some of these funds, they thought, okay, these funds don't make good standalone funds, but people just aren't getting that. And they're loading up on them. Then I wonder if Dave thought, hey, being altruistic, I wonder if he thought we can make these a little better standalone funds by making them catch more upside. Let's see. We'll just sell the option in the morning, leave them uncapped at night. We'll make a little less yield, but catch more upside. Maybe it's a conscious decision, and maybe it's right on the money, and it may be the perfect compromise for everybody. I'm not knocking it, but it's something to consider, but it's not the be all and end all. And where I was going with that, when it's used as part of an allocation, if you have like 60% growth, 20% bonds, and then 20% high yield stocks, which would include NVIDIA and Tesla and triple QI and QDT, something like that, I think that would be great. And then, yes, the NAV depletion and decay, it's something that affects you and it comes into your math, but when it's that small of a percentage, it's not that big of a deal. And ideally, that's what you want to keep the percentage of your income investments, be it bonds or high yield funds or REITs or whatever, as small as possible. I mean, that's my idea, to keep as much in growth as possible. Everyone knows growth is better. So the whole idea is to use as small of an allocation as you can get by with. But anyway, so that's when I see people that are all in on these funds, even though I appreciate their enthusiasm, I just think they're doing it wrong because these funds don't make good standalones. That's what I think. All right, so let's see. Brad here is saying something. I assume Tesla is capped. Why do you think they won't uncap it? Tesla ran up. Yeah, well, I don't know that they won't uncap it. Maybe they'll uncap it next week. This past week, it has been capped. So I don't know what goes into, it's another thing of knowing the future. Here's my way of dealing with the situation. I would just keep them uncapped all the time. I would just announce that it wouldn't be yield max anymore. It'd be yield about half max. You just call it yield, half max or something. But it would be just everything uncapped all the time. And then what it would do, even though these would not technically be as good of yield funds, and that's what they're made for, but they would be a better standalone fund. They would have the ability to stand alone because you could get some income, but you don't kill your upside so much. So I'm going to make some content on the concept of the standalone funds. I think some of these funds are built where they can stand alone and some of them aren't. And it makes a big difference, and you have to know which one you have. For instance, I love triple QI, but it will not stand alone. It needs to be as part of an allocation. But there's other funds in here like JEPQ where it could be the only fund you had. If somebody stuck a gun to my head and made me get just one of these funds, it would be JEPQ or something like that, one of the super duper stable ones. But luckily, there's no one sticking a gun to my head. So, and I have the ability to use, several funds. And that's the whole idea. I think as small of a percentage as you can get away with to allocate, because these pay super high. Since these pay so high, if you can mix in some of the higher paying ones, you don't have to use as big of a percentage to get whatever income you're going for, right? That's the way I look at it. All right. So what, got a curve comment here. Let's see. Curve has been doing well. Yeah. Well, okay. So I could comment about Curve. I don't follow it every day, but Curve sells options in the monthly time frame. Defiance does it in the daily time frame. Okay. Well, without knowing anything else, the monthly time frame is way more stable, less profitable, not going to make as much money. You're never going to, but it's way more stable. So yes, Curve is a good fund. Curve is stable as they get. ProShares iSpy is good, iSpy is good, but SpyI and Triple QI are really great funds. Those are the ones that do the monthly time frame. What about FEPI? FEPI does the monthly time frame. So the monthly time frame funds are going to be the ones that are going to tend towards safety more and reliability, but yield a little less. You're going to cost yourself a little bit of less yield. Hey, what's up, retired cop? It's great to see you in here. Yeah, I know it. Well, the thing is, I'm in Texas, and we're Pro 2A down here, and I'm prepared at all times. So if somebody does stick a gun to my head, I'll be prepared for them. I can assure you that. But yes, no one's sticking a gun to my head. No one's sticking a gun to my head. All right. So do you guys have anything else? Yeah, yield half would be good. I'd be fine with yield half. Even these ones, it's obscene that Coney pays 150% and stuff. I mean, it's great, but wouldn't it be fine to pay 75 and catch some more upside? I mean, so anyway, I just say they uncap everything, but he's not going to do that. Jay's a very measured person. What he's probably going to do, what I'm imagining he'll do, is he'll use some kind of measure, and he'll try to find the ones that have pulled back the most, maybe using RSI, the ones that are most due for a bounce from like a severe pullback condition. And that may have been what kept him off Tesla this week. Let's check that out real quick. You guys might like this. This is my working theory on how they're doing it. But so let's look at all Tesla. Let's switch to the daily. 30 minutes is too short. We'll get this damn stuff off here. So, even if you subtract a week from this, they were right here when they had to make their decision. So they're already at upper Bollinger Band. Jay may have thought, man, they're closer to the top than the bottom. You wanted to do it back when you're down here, at least underneath Bollinger Band. I mean, that'd be one way. That's kind of what I think he's doing, because let's see what he did. Let's look at AMD. He did it on this one, but you subtract 5 days, 1, 2, 3, 4, 5, and we're still pretty high on the Bollinger Band. So there goes that theory. The theory does not work on that one. Theory does not really work on Amazon because it was still pretty high. What else did he have uncapped? Coney. Okay, on Coney, he's thinking this thing's going to bounce. You don't want to, it's pulled back so far, and this is Coney, for God's sake. So I thought maybe he was trying to uncap him on the ones that had pulled back significantly. That's my idea. I'd be anxious to know what you guys think. Like I say, why does he even fuss with it? Just make them uncapped all the time. Or I suggested he just call them target funds, and the single stock target funds, and they just put a target on them that's about half of whatever they have been paying. So it'd be like a single stock target fund at Coney, and the target would be Coinbase target would be 50% or something. And they would do it like QT, and they would only take, about a third of what they really could make and leave the rest of the upside open, just like they done with triple QT, and make them all target funds. And I kind of thought that's the way they were going, because they're coming out with some target 12 funds that we really haven't talked about much on this channel yet. And I'm trying to think, is it Defiance or Yield Max? I'm confused. I saw a filing. I want to say it's Defiance, but it's coming out with some target 12 fund. Anyway, I'll look into that. But I'm thinking, okay, so let's see what else did he. MRNA, he did this one. This was a pullback candidate, right? That's the reason he didn't want to be. It looks like he's doing the call spreads on the ones that have pulled back the severest. Okay, so let's see what else we have on the call spread list. And this was as of a couple of days ago. He probably closed a couple of these, but midweek, this was accurate. He's rolled into a whole new set. I'll figure out which ones they are. And Sunday night, I'll have a new show on, and we'll have a new set of call spreads for this coming week. But yeah, hopefully he puts Tesla on there. I just want to put all of them on there. Okay, but let's see what else we have. Coinbase, see Google, JP Morgan, PayPal. Let's check Google. Okay, Google, if you subtract 5 days off it, it was at least under the mid of Bollinger Band. So that's a pullback candidate. I think that's fair. I just looked at those and I've already forgot PayPal. Now, PayPal, if you subtract 5 days, 1, 2, 3, 4, 5, it was underneath Bollinger Bands. That was a good one to do. JP Morgan. There's nothing magic about being underneath the Bollinger Bands, but at least you're in the bottom half of the distribution, and you can tell yourself at least, hey, I'm buying the dip. That's the way a lot of people buy the dips. They buy when it touches the bottom Bollinger Band. So this one is definitely, you can see why 5 days ago especially, you'd want call spreads. And JP Morgan, like I say, I just do call spreads in all of them. Sky, SQY, let's check it out. So, of course, it's underlined as square. 5 days ago, it was right here. It was mid-Bollinger Band of breaking out. I tend to be the opposite. I'm the kind of guy that likes to play on trends, and I like to play on a stock that's trending until it quits. But in others, so I don't usually like pullbacks. I would tend to try to buy the ones that have broken out and think they're going to do better in the coming week. But I don't know. Jay knows better than I do. Jay knows better than I do. Okay, so did that explain how they decided which ones to do? I think that's probably what it is. Okay, sorry. Okay, knew these ETFs. Okay, let's try to answer this question. Sorry, knew these ETFs. So do you buy and hold, or are these for short-term trades? We take this guy. No, these are designed to buy and hold. Like these are, if you've ever had a bond fund where you've had some money, but you didn't really want to risk that much of it, but you needed a steady income, you can go out and buy a bond ETF, or you can go buy a government bond. And your broker will just give you monthly payments every month. The bad thing is your bonds don't go up and down that much. You won't make that much money. Your account won't grow as fast as it would have had you just probably left it in stocks. But if you need money, bonds can be a lifesaver. Okay. And so can real estate investment trust and also dividend ETFs that invest in stocks that are dividend companies. So all these guys have done is take stock investments and turn them into a quasi bond investment. They've taken a stock, and so it has the name of a stock, but they're doing financial engineering with it basically, and they're writing options, and then they're paying you a monthly check. But it's similar to the bond example. It's great. Oh gosh, I have a monthly check. Problem is, hey, you got a monthly check, but because of the mechanics of how these work, you give away a lot of your upside. Same thing when you buy a bond. So that's what they're like. They're fixed. It's what's called a fixed income investment, or it's a quasi fixed income investment. I would say it's mainly for people that are older and have more money, because it's a way, if you had a sum of money, say like $500,000, you could buy an investment like this, and then or a bond, and you could get a check every month. That's the idea with these types of investments. But there's lots of in and outs to these. So keep watching this channel because I talk about those every day. But let's see what this comment said. Months of low volatility has made it harder for some of these index to hit high yields. Yes, correct. I agree. Volatility can pick up some. I think it will give them a better, give them a break and give them a chance to capture some more yield. Yeah, I appreciate that. Thanks for being here, everyone. I appreciate you being here, retired cop. Yeah, maybe the gun to the head example wasn't the best example, but you guys get my point. You guys get my point. All right, guys. Well, I really appreciate you being here. Brad, it's good to see you here. I appreciate you here as well. Thanks, everybody, for stopping by. I'm going to come out with some good content this weekend. Trying to think if I can tease it. Jay was on Kamir's show Sunday night, and I have a script written, and I haven't presented it yet, where he talks about Defiance. And I'm going to react to that video, but I will do that this weekend, or I'll do that tonight. But that was a great interview, and I wanted to react to some stuff that happened there. So anyway, I'll see you guys on that video, right? Let me know what you think. Leave a comment, subscribe, whatever. You know the deal. It's great seeing you. Have a great weekend, Michael. Have a great weekend, Brad. I appreciate you. Brad bailed me out in New York City. He sent me money for an Uber. Now, I had money, but he bailed me out. He sent me $100, and Ubers are like $100 in New York. He saved my ass. Or it was damn sure appreciated. I really appreciate you, Brad. All right, guys. Have a good day.